We just touched on $25,000 worth of ways to get money out of your company tax-free. Everything is about getting this information to someone because time is either money's friend or enemy.
Welcome to Built4Profit Podcast, where entrepreneurs share real stories and strategies that actually work.
We're here to inspire, challenge, and give you the playbook to profit with purpose. Let's get into it.
Let's do it.
Hello and welcome to Built4Profit Podcast. Today, I have my co-host Elizabeth Rosenberg, and I am Sha Grondin, and we're here today to talk about leakage. Yes, leakage of opportunities. It is the top 5 missed opportunities for entrepreneurs to bring in tax-free income. Does that ring a bell at all, Elizabeth?
It sure does. And here I am just trying to be professional and talk about this, and you're over here with leakage. This is what I have to work with.
I know. Well, we have to get real. And it's real money we're talking about today. This is probably the number one requested topic that we get when we go speak somewhere, isn't it?
Yes, it is. And so we were laughing because we said our favorite people, you guys, we have not shared this with. And so that's why we wanted to sit down and record this for you today.
Absolutely. And it's interesting because what we hear, the feedback is, yeah, I've heard of it. I think someone was talking about it, but I don't know how to do it, or I didn't know about that one. So you guys are going to get the inside scoop today. And just so we can have numbers, if an average, we'll just say, if you have 100,000 income, like coming into your business, right, or into your household, we have strategies roughly to about 25,000 tax-free income. Isn't that about right?
Yep, those are the numbers.
All right. So hopefully we got your attention now. So top 5, keep in mind, we in the toolkit have all the tools to implement or the people to help you implement them because ideas are great.
Implementation's better.
All right, there you go. We're all about getting things done because we are the can-do business kids. So let's start off. One of my favorite, the Augusta rule. Yep. People have heard about it. You all know about the golf tournament.
Yeah.
So we're going to make it work for us. So this strategy is basically you can get up to 14 days of rental income tax-free personally. And what we do is with this particular strategy, now remember the key is 14 days. Your business rents your household up to 14 days through the year. And the business expenses, and it drives down the taxable income in your business, and you transfer that over to tax-free income in your household. Now, like anything else, documentation, meeting notes, and all that good stuff. So, here's an example. I typically do a large holiday parties, and people stay, and then we charge for parking. We rent my whole household out, but the household is rented, the whole thing, and that's a business expense that goes into my personal income. You have a lease agreement, you have a documentation, you have meeting notes, you can do anything from parties, events, strategy planning, board of director meetings, any business thing that your business would actually utilize that space for. So documentation is key. It's 14 days. Now, you can't rent the Taj Mahal when you do not live in one. So the income has to be, or the rental income has to be reasonable to the marketplace. That if I went on, what is it, like Airbnb or something like that, it would be a reasonable amount that I would rent that space for.
Yeah. Or maybe like a co-working space.
Yeah, absolutely. And this is one of the most underutilized strategies and so easy to implement. In the toolkit, we have a sample lease and things of this sort. Talk to your CPA, see how this fits into your business strategy and how you can optimize that homeowner experience.
Yeah. And it's fun when you start to see the different ways that you can, things that count, because you likely use your home for things for business. And so it's just like you get paid for it. So double bonus.
Right. And just to give numbers, some perspective on it, it's on average, I would say minimum around 6,000. You know, it would be a reasonable rental for 14 days for an average household. And obviously it depends on, you know, how big your house is, the states, all the good stuff like that. But definitely check this one out. Very easy to implement.
Yes. And we make it even easier in the toolkit. So I'm going to take on number 2.
Yes, you know, something dear and near to me
Is
if you got some kiddos, listen up.
kids on
Time for them
payroll.
to show up.
Oh, I actually had someone shredding paper last night. So Yes. So kids on payroll, I think this is one that people hear about a lot, especially on social media, and they don't take advantage of it. And I respect this reason, but they're like, I don't really know the rules, right? And I'm not trying to get audited or get in trouble because I'm doing it wrong. So they just don't do it. But you can deduct up to the standard deduction, which this year right now is over $15,000 in and pay your child that and get that money out of your company tax-free. So that's a substantial amount of money to say, oh, I'm not going to do that because I don't know all the rules. When we're talking 15 grand per child.
Do the numbers. I got 5 kids.
Exactly. We're talking some serious tax savings. So a rundown of how it works. It is different per entity. So check with your CPA, obviously talk with them about the type of entity that you are. But your children are doing work in your business and you are paying them. And depending on the type of entity, you're either paying them at their tax bracket, which would be much lower than yours, or they get that money tax-free, again, because of the type of entity, so you're paying no tax on it. So imagine $15,000 per child coming back to your household and what you could be doing with that. Now, a couple key things that you want to keep in mind to make sure that you're doing it properly is that they're being paid for reasonable work. I mentioned shredding some paper. So they're doing something like that, taking out the trash, cleaning up. We have a lot of mobile customers, cleaning the van, cleaning the vehicle, keeping things organized. Maybe they're on your marketing material. Heck, maybe they're doing your social media marketing for you, right? I think
They probably do a better job.
yeah, the 15-year-old might be better at reels than we are. So doing maybe some kind of editing, or maybe they're the children in the marketing material that we're seeing on the pamphlets or that we're seeing online or on your website. You can get really creative.
And that's always a question too, because they always think they have to be a certain age. And when you drive down the road and you see the plumbing billboard and he has this family, or the carpet cleaning has this, these children on the carpet, would that be a good example?
Yes, that's an amazing example. I hope that child is getting paid and that they're taking advantage of it, because when that money comes through, again, it's either at no tax or minimal. It's coming into an account in their name. And then you've got options. The part of me wants to be like, open a Roth IRA and invest that money in and watch it grow so quickly. We know Shay wants that too.
It's so sexy when you say it, right?
I know.
Tax-free money to tax-free growth.
So,
Jeez. Oh my goodness.
We're going off on a whole other podcast there. But they can use that money to tuition, sports camps, different things that they want to do. And I always love anything that teaches kids how to manage money. So that money comes in and you're already having natural conversations with them about, we save a little bit, we do this, and you learn in such a different way from doing rather than just being told what to do with stuff. So many benefits, but if we're just sticking to the numbers, some serious tax savings when it comes to having your kids on payroll. So standard deduction is the max there, and it brings money tax-free back to your household. So
Yeah, and check it out. It changes every year.
absolutely, yes.
So make sure you're always compliant and documenting.
Oh, do we need to document something? You'll hear
Here's I'm pulling my legs now.
You'll hear that with each of the statements that we're going to go over today and probably forever. But you do have to document it. You have it in writing, why you hired them, the job you're doing, you track their time, you treat them, as an employee, you do things properly. And with all these strategies, you want to make sure you document in case someone comes looking. You're able to do this though, and that's the last thing I would just want to drive home before you go into this next point is these are all things the IRS allows and has in the tax code for you to take advantage of. Like this is mentioned specifically. So by not taking advantage of it is simply dismissing a tax advantage that they are giving to parents who run a company and have the ability to employ their kids.
Absolutely. And don't let fear, keep you from these opportunities, because they're there to encourage entrepreneurship and being the things that small business owners are the number one employee in the United States. So they're giving you opportunities. We just want to make sure you're aware of them. And also just small detail. Keep in mind they're minor children. So at the end of the day, you do control those assets. We won't be rubbing it in their face or anything, but it's true. So you have discernment over that. Another one that what we hear a lot about that people don't realize there's an opportunity for is I don't know of a business yet. I'm sure there's one out there. Maybe if you are that person, please write to us and let us know that has not contributed money into a startup of a business or at some point in time infused capital into their business.
Absolutely. How else is that puppy getting off the ground?
I don't know, all right? At least they bring in that big one. But for those of you who have, what an opportunity to make that a loan, to get that money back out and get interest on it. Reasonable interest in the marketplace for a business. And we joke about that because if you're seeing some of these credit cards interest rates,
Unreasonable.
yeah, all right, I was going to say, we won't even use any terminologies for that one. But anyhow, so that monies that you've contributed into your business or any point in time for equipment growth, expansion, just even to startup, to get supplies or employees, make sure you're documenting that and doing a promissory note or whatever documentation with that reasonable interest and how that payment is returned. Is it a balloon payment with penalties? I mean, I don't know. Be reasonable. But like I said, document it, be reasonable, and get that money back out of your business tax-free, and don't let that money lose opportunity.
Yep.
Because if you had it somewhere else, or if you're keeping your business just like a person, if I just love you, but if I loaned you money, I probably would have it documented.
Yes. And there'd be interest.
Yeah, I love her, but I'm going to like her when she gives me a little bit of money on my money. So make sure you have not missed opportunity on the table for that. Another way that money gets leaky because it's not giving you the money back for the contribution.
Yep. That's great. So our next one is something that you're likely doing anyway and not getting paid for. So we're talking.
Does it sound good?
No one likes this type of role. We're talking about driving and mileage. And there's two different ways that you can reimburse yourself, but we're only going to be talking about the standard mileage deduction today. And what you want to know about it is that the amount changes every year. So in 2025, it's 70 cents. So I want to put this in context for you. So 70 cents for every mile that you're driving. I've worked with a lot of companies that do drive a lot. The owners drive, and at the end of the year, if we don't have mileage already on file like we should, I'm asking for their mileage logs. And they would turn in mileage logs that had 15,000 miles on them. Wow. Now, I know that's a lot, but when we turn around to reimburse them that money, we're talking $10,500. Tax-free.
Respectable money right there.
Yes. And we recognize that not every company drives that much, but even if you drove 5,000 miles a year, which is likely, you're going to meetings, you're going to conferences, you're going to the airport, you're going to the bank, you're going to the post office, you're going places. If you were at 5,000 miles, you're reimbursing 3,500. Tax-free. It's a different type of money. I feel like receiving it when it doesn't have tax on it. It just feels happier.
I stop and pick up pennies on the ground.
Oh, and there's two benefits. So you've got the benefit of obviously that money coming to you tax-free, but you're also taking that deduction on the corporate level or for the company and bring down that taxable income. So it is benefiting you in both places. And really just going back to the point of you're driving anyway. Now, one of the things that people forget sometimes is that if your home office is in your home, that's where your office is, then
It's really tricky.
I know, it's confusing.
Watch her.
Anything that you're going to the bank, you're going to a meeting, your mileage starts then. Because although you can't write off to and from the office, because most people have to drive to and from the office as mileage, you're already at the office and you're now going to your destination. So it's really, again, we talk about the benefits that the IRS is trying to give. This is one of them. So don't miss out on that.
What I gotta ask you though, let's keep it real. Why do you think people they just don't do it?
Yeah, it's annoying to do. Like you have to make yourself do it. If I get in the car to go to a meeting, my first thought isn't like, oh yeah, let me write this down. So then they're like, oh, it's not like when you spend and you have a receipt on file, you have to go grab the receipt. But that's as far as the burden goes, if you want to call it that. So the action is that if you didn't do it in the moment, you have to think back and figure out where you went. And that's what trips people up. But if I remember, I mean, this is what I do and would talk with other clients is we say, okay, well, roughly, how much do you think you drove this year? Because if I say, I didn't drive that much, but probably 5,000, let's do the math. So $3,500 tax-free. Is that worth it for you to do?
Yeah.
I mean, if the answer was truly no, okay, then, well, there you go. But most people are going to say yes. Yeah. Let alone you talk about someone who's 7,000, 10,000.
Or have a mobile business. I'm sure they have to be doing that.
Yes.
And there's so many, always the barrier of getting something done. There's apps, there's things. They have an assistant or something. They can do calendar, to Google here to there, put the mileage in there.
Absolutely.
Just all kinds of things. So really want to encourage that and give some feedback or suggestions on what people are doing to implement it. Because it's like going to the gym. The benefits are there.
Yes.
It's just getting up and putting your shoes on.
Yes, absolutely. And of course, we want people to be doing it in real time. The IRS wants people to be doing it in real time. But truly, if you were not, but you're going to get accurate information, you look back at your calendar, I bet and I'm being generous with this statement, in 2 hours, it could be done. I think it would take less than 2 hours. And so if I said, I have a task for you, it's going to take about 2 hours, but I'll give you $3,500. Do you think you could get it done?
I'd probably try to make it in an hour and a half.
Yeah. Like it's not hard. It's not physical labor even. So you can do it. You can do it. And
That's leakage.
That is leakage that no one wants.
Not pretty.
No one wants that. And it leads into, and this would be similar, I would say, on the final tax strategy is maximizing your deductions. And this is,
Elizabeth's like a ninja with this. I mean, I think I'm good, and she's like, leakage.
I was saying,
money on the table.
leakage. When I think of, we love entrepreneurs, and we just want them to get every benefit that you deserve, first of all, and that you're allowed to have. Because there's some that we're not, and there's a lot that are specific to entrepreneurs. And so when we talk about maximizing business deductions, there's a lot of things that we can write off as business owners that someone working for a company can't necessarily deduct. So I'm going to skip the obvious things like office rent and copy paper, because hopefully you're already doing that. But we're talking about home office deductions. There's 2 different ways that you can do it. We go into that in detail in the toolkit. But on a high level, the percentage of your house that you're using for your home office, the percentage of the internet, the percentage of the utilities, the percentage of the repairs, the percentage of your cell phone. You see how these things really start to add up. I mean, you talk about over 12 months, let alone all of the software that you're using, likely AI now, because isn't everyone? Maybe your bookkeeping software, your Canva that's helping you design things. Anything that you're paying for like that should be expensed through the company and needs to be deducted, likely at the full level there. And then
what is one of the number one things that people don't think about, top of mind?
I think the home office deduction, people know, but they do like square footage, and they don't take into consideration that other list of, utilities and those expenses and repair and maintenance and just some of those other things that all contribute. But I think one of the tricky ones, this wouldn't be the largest, but easy to kind of mingle in with other things, is like continued education, courses, memberships. Our toolkit would fall into that. But lots of times people are doing some sort of learning or buying books to help them in a different area. Now, is that the biggest expense that they have as a company? Probably not, but it's an expense and they add up. And going back to, the same thing that we're saying about all of them is if you can get that money back tax-free, and it's also bringing down the taxable income. And that's a hefty combination. Yeah. And things really do add up fast. So all types of continued education you want to make sure is on there. And then anything for travel, those Ubers, parking at the hotel, obviously your hotels, flights, meals. Sometimes people go overboard on the meals, but sometimes people miss it. And they miss that and they're out networking and doing things. So maximizing your deductions is so crucial and something that, is easy for people to kind of miss things because they add up on the personal card. And then they're not going back and revisiting and saying, actually, this is a business deduction. Either I need to reimburse myself or I need to switch the card it's on or allocate it.
And I know you're real big on that. And we have a whole training about commingling funds and kind of keep things separate. Elizabeth, what is great about all these strategies is you can utilize them every calendar year. And we can still have opportunities to utilize some of them in the fourth quarter.
Yep. So they can do it now, and then this knowledge just keeps serving them, because every year they get systems in place from the beginning so that they're not scrambling at the end of the year. But absolutely, we just touched on $30,000 or $25,000 worth of ways to get money out of your company tax-free minimum.
Geez, that would more than pay for the toolkit, wouldn't it?
That would pay for a lot of toolkits.
Shameless plug. Just throwing it out there.
Oh, but this is what we want all the entrepreneurs to know is there are ways to get that money out tax-free. And lots of times people don't talk about it the way they talk about other things because they simply don't know, or they've heard of it, but they don't really know how to do it. And it's just part of why we drove to create not just this podcast, but also the toolkit.
And there's different kinds of people. And we work with all kinds. There's ones that go, I'm going to roll my sleeves up and go do it, implement it. I just need to know how to do it. What do I need to do? The steps, like the recipe. And that's great. And the toolkit has that in there. There's people like, I want that. Where do I click here and have someone do it? So we have those options, which I think is great because once again, everything is about getting this information to someone and ease of implementation, time efficiency, right? The speed of getting these strategies in place, because time is either money's friend or enemy.
Yep. And we want it to be your friend.
Right.
And make no misunderstanding. Everything that we have gone over, we have made it the most efficient way, because even though we like numbers, doesn't mean we like receipts, doesn't mean we like tracking things. So we have found ways and created systems and have passed them on for busy entrepreneurs to take and implement, because no one likes sitting down and doing some of this kind of stuff.
Absolutely. And we want everything in your corner, unfair advantage, to be as successful as possible, as quickly as possible, and profiting.
That's right. That's right. So we've got the link to the toolkit. If that is a resource that you need, we're here to help support that. Share this episode with another entrepreneur. These are not talked about unless you're inside entrepreneurial rooms and conversations. And our goal is to get it out for every entrepreneur to know, no matter what type of room or circle that they're already in. So share this, leave us a review. We are on Apple and Spotify now, obviously YouTube as well. And we'll see you in the next episode.
Awesome. Elizabeth, is there an opportunity inside the toolkit to have a consultant sit down with me and I can ask questions specific to these tax strategies for me?
I'm so glad you asked. There is, anyone who joins the toolkit gets a 30-minute free consultation with a CPA. You guys already know they usually charge by the hour. So this is a huge benefit that we negotiated because we know entrepreneurs need it. And so we made it happen. So don't miss out on that either.
All right, take advantage of it. See you in the next podcast.
Elizabeth, do you know that when you're launching a franchise, one of the biggest expense and biggest risks typically is the build out?
I can see this.
With missed deadlines, overrunning budgets and stuff like that, they can increase anywhere between 10 and 25% of unexpected expenses.
No good.
That's where Build USA comes in. Everything from pre-construction to the grand opening, they're with you every step of the way to make sure those things don't happen.
Yeah, and they've got over 25 years of experience in building franchises nationally. So when you've got that much on the line, why would you trust it to anyone other than someone who's got the right team who can get it done? Mm-hmm. They've got the reputation, the proven expertise, and the national resources.
So if you're ready to get your doors open faster with no unexpected surprises, go to buildpointusa.com or click in the show notes below to schedule your 30-minute discovery call with one of their experts about your project.
It's a generous offer.
It kind of is. So again, buildpointusa.com. Check them out.
We'll see you in the next episode.